Welcome to the AdCut Show. Today we are diving into a critical issue facing the world's second largest economy, deflation. As prices drop, concerns are rising about the health of Chinese economy, especially as the global market keeps a close watch. So, can China solve its deflation problem? And what does it mean for the rest of the world? Now, first let's talk about what deflation is. Deflation happens when the overall price level of goods and services falls for a sustained period. Unlike inflation, where prices rise, deflation can lead to reduced consumer spending, lower profits, and slower economic growth. And when a country the size of China faces this, it can have a significant ripple effect. So, why is China dealing with deflation right now? Well, there are a few big reasons. One of the major factors is low consumer demand. After years of rapid growth, Chinese households are now more cautious about spending. Part of this stems from pandemic-related uncertainties, but it's also a result of slowing income growth and rising youth unemployment. Then there is the real estate crisis. China's property market has been struggling since big developers like Evergrande started defaulting on their debts. This crisis has led to a decline in property values, which weakens consumer wealth and confidence. When people feel poorer, they are less likely to spend. Finally, China has an aging population. With more retirees than ever, there is a shrinking labor force and growing number of people who are more likely to save than spend. This trend could keep demands low for years to come. Deflation can be a serious problem. When people expect prices to keep falling, they are likely to delay purchases, hoping to buy things cheaper later. For businesses, lower demand can mean reduced profits, which could lead to cuts in jobs and investments. It's a vicious cycle that slows down the entire economy. For China, a long period of deflation could make it harder to achieve its economic goals, including becoming a global tech leader and rising living standards for its population. But China isn't standing still. The government is working on several strategies to combat deflation. First, monetary policy. The People's Bank of China has already cut interest rates to encourage borrowing and spending. However, low interest rate alone might not be enough. So they are also pumping more money into the system by encouraging lending to businesses and households. Second, physical stimulus. Chinese government is increasing spending on infrastructure such as roads, building, and public services to create jobs and boost demand. They're also supporting small and medium-sized businesses to keep them afloat during these challenging times. And third, reforms in the housing sector. The government has started to ease some restriction on home purchases and mortgages, hoping to stabilize the real estate market and to boost consumer confidence. But despite these efforts, there are challenges. For one, consumer confidence is still very low and the real estate sector remains fragile. Another big question is whether these measures can have lasting impacts, especially given Chinese aging population and shifting demographics. Some economists believe that without more aggressive policies such as direct stimulus checks to households, China might struggle to pull itself out of this deflationary period quickly. Others argue that China needs to focus on structural reforms like improving social safety nets to encourage spending in long term. So why should the rest of the world care? Well, China's economy is deeply connected to global markets. If Chinese slows down, countries that rely on trade with China could feel the impact. It could also lead to lower demand for commodities like oil and metal, affecting economies worldwide. Additionally, pressure of deflation from China might influence global inflation rates. With China's production costs falling, it could lead to cheaper goods for other countries, putting more downward pressure on prices globally. To wrap up, China's deflation problem is complex and challenging. While the government has tools to stimulate the economy, it's uncertain whether these measures will be enough for sustainable growth. The situation is a reminder of a delicate balance China must maintain as it navigates a path towards long-term economic stability. So, what do you think? Can China solve its deflation problem, or is it facing a more longer period of economic slowdown? Let us know your thoughts in the comments below. Thank you for watching, and don't forget to like, subscribe, and hit the notification bell for more such videos.